And we're live. So, a very warm welcome to everyone to one of the last sessions as part of our base camp series in the lead up to the Asia Pacific Summit of the CMT Association for the year 2022. And this session is especially special because this session came from the by request from our platinum sponsor Sher Khan with a very specific intent. The intent to help encourage our serious retail traders from in the audience to really think of how can we make the best of the markets and how can we make our decision process meaningful, thoughtful, and in the end protected against the risks and the volatilities that the markets can present. So, with that in mind, the session is themed Key Technical Analysis Skills for Serious Retail Traders. What we want to focus on is how can retail traders use essential tenets of technical analysis so that they can take care of some of the key workflow and the key skills for actually trading and managing investments. Now, two very important areas come to mind. One is how, from a wide universe of securities that are available to trade, do you find meaningful trade ideas and what strategies do you use to trade them? What are the different ways you can approach markets? And the second one is how do you protect yourself against market risk, both from what is happening externally in the markets and what is happening internally within our minds? So today, myself and our key speaker, Vishal Mehta, will focus on the first important aspect, which is how do you find trade ideas, opportunities, and build systems out of that. And next, in our next session on the 8th of November, we'll focus on the second part of it. How do you manage risk and how do you protect yourself against both the risks of the market and the risks of the mind? So, on that note, let me welcome my dear friend Vishal Mehta onto the stage. And Vishal, such a pleasure to have you talking to everyone in the audience about your thoughts on the key technical analysis skills for serious retail traders.
Thanks a lot, Joel, and always excited to be part of this conversation. I really want to thank Sher Khan, our platinum sponsor, to, kind of to bring this along and make a statement in terms of technical analysis. It's just not buy here, sell here, target this stop losses. It's so much more to it, and that's what we have been advocating it for a while. That what technical analysis in the Western world, how they look at it, and how that information can be also relatable to our Indian context and as a trader that I've been using for my day in, day out perspective.
That's wonderful, Vishal. And here's something that I want to mention for the benefit of everyone who's joining the session today. That what Vishal will be talking about, think of it as the tip of the iceberg. What he's talking about are a few skills that once you are familiar and comfortable with this body of knowledge, you will be able to apply with practice and consistency. But by no means is it the entire body of knowledge. It takes a lot of rigor and a lot of discipline to really learn and develop expertise. And so I just want to make sure that that is something that you are able to bear in mind as we go through the session, that this is a beginning, not the end of your learning journey. With that, Vishal, I'm happy to turn the session over to you. And I look forward to everyone enjoying this really meaningful hour and some of learning.
Thank you, Joel. And I just want, if you can just put it on your chat, on your right hand side, that you are able to hear me, see me clearly. So, and this session will be participative. I can see a lot of questions coming in already. So just put out your questions and we will run through the presentation. And as and when, we come to the close of Q&A session, I'll go to pick them up and try to answer those, because me in the market, just to give a background, that I've been in the market for 20 years, and 20 years using technical analysis gives you a lot of bit of insights of what really works and what doesn't work. And we're going to take those things and put it into a trading perspective. So with this, welcome all. I can see Jagdish, Vishnu, Amol, Krishnan. Hi, all that you guys are there. I'm super excited. So let's start with the presentation. Joel, if you can just confirm to me that if you're able to see my presentation now. Oops, we started with a thank you.
Yes, so sometimes they say life is uncertain. Eat your dessert first.
Yes.
So on that lovely note, Vishal, I'll leave you on stage and I will join in from time to time if there are any interesting questions, something else that that you might want to know, anything interesting that the audience is bringing up. But I'll leave you all right now in the very safe hands of Vishal Mehta, CMT.
Thank you, Joel. So let's start with the concept of technical analysis skills for serious retail traders. So I'm going to put out certain presentation, and I've been fortunate enough to be on the board of CMT Association US, and that has given me a lot of perspective to interact with the traders in the US as well. And when I spoke to them, there are certain skill set and certain mindset and the risk management that they follow. So I'm going to talk about something about that. So I really want to thank our platinum sponsor Sher Khan by BNP Paribas to bring this along. They were very, very strong in that. Say, Vishal, when we are going to talk about CMT symposium, that is we're going to talk in a while. But lead up to that, people should be aware of what is technical analysis capable of, and how do traders actually use technical analysis in your day-to-day life to make money. And I'm sure, let me ask you a lot of questions, okay? And I know that we are going to talk about the risk management and the money management and the psychology from in the next session. But I really want to start with that question itself, that why are you trading? Okay, and I always firmly believe that the why for any person is very important. If you don't know what is your why, then there is a problem. So if you can put it on the chat, and Joel, if you can help me to figure out what are the whys people are putting out in terms of kind of why you are trading it, why you are using technical, or why are you trading, that would be great.
Certainly, Vishal. As they come in, I'll share this with you. And
Sure.
yeah, I'd invite everyone in the audience to share their thoughts as well. This is going to be a fun, interactive session, and I'd love for everyone to make the best of it. To make money, Vishal, that's the first one. And I find that the most fascinating and
That's
most honest as
perfect,
well.
right? And who has said that? I am not able to see the comments, but I really want to understand who
So
said
this
that.
is Sujit Jaiswal.
So, Sujit, bang on target. We are all here for making money, but then in that process, Sujit, we always want to make profit, right? Yes or wrong? Everybody can agree. Joel, you have to vouch for it as well, right? So, if you are not profitable, how you cannot make money, right? That's the real problem with a lot of traders who jumps. And the topic of this session is serious retail traders. That word serious has a lot of connotation and a lot of power behind it, because a lot of young amateur trader jumps into the market thinking that I always want to make profit. And I would not blame them, but it comes from a thought process from the childhood we have been taught to, right? So we always say that you need to be right all the time. Joel, just a question, like in your friends or anybody who has kids, and they say, okay, they get 9 marks out of 10 marks, what is the first question that an Indian parent would ask? I don't know about Indian. Let's not be very Indian specific. Any parent would ask, if a child gets 9 out of 10 in his exam or in her exam, what is the first question?
Yeah, the first question my dad asked me was, where did that 1 mark go?
Seriously, and every one of us have gone through it. And what we have realized in that journey, Joel, that that we have been taught and groomed to be right all the time to be successful in the world. But trading is such a profession that in which you can be more wrong, and that is the problem, that a lot of amateur traders do not make money because they always want to be right. So whenever they make money, they just book it out, but whenever they are in loss, they will continue to hold into the loss. So I know it's not a psychology session, but everything has to boil down to the psychology and what we are going to talk about on the CMD. So a disclaimer, it's I'm going to talk about a workflow based solution. I'm going to talk about how the CMT has really helped me as a trader to provide me a well-rounded approach to the market and understand what is the herd mentality, or for lack of a better word, what is the mass psychology that I need to learn from it. So, and that's why I really kind of keep on emphasizing on the CMT body of knowledge, because it's just not another course, it's a gold standard of technical analysis. And I've been meeting a lot of traders, and what I've realized is you can go to a YouTube and you can get an information, but the problem with that is it's all unstructured. And sometimes, most of not sometimes, most of the time that you see on the social media, on the YouTube, is actually garbage, right? And then what we realize, okay, there is a gold standard of technical analysis teaching you from the ground up about what are the charts, trends, patterns, and how you can actually make money using those concepts. So this is the CMT body of knowledge. There is a third level as well, which is more advanced, where you need to give more details about your analysis of the market. So when we talked about when we were discussing how to go about this session, we said, okay, we are making this presentation for serious traders. So let's not talk about a very, very simple thing. What is a Dow theory, or what is a trend, or what is a channel, and everything. And I'm sure a lot of people know about them. And by the way, they are not very basic. Also, they are more advanced stuff as well. But we said, okay, how can I take all the information that is available to me as a technical analyst and actually make a meaningful trading decision? And that's what we come out with the topics agenda and the the content. So what we said, okay, what are the different kind of trading style? And these are few of the trading style. I know there are many, many, many more trading styles that you will have it. But what I've realized is these are the three important ones that I use for my day-to-day life as well. And I have seen them practically, using it in my day-to-day life. So I can actually give you what I'm using, and that is a workable solution for you to build on it. Then I'm going to talk about building trading systems, and I'm going to talk about how do you combine strategies, a trend following and a mean reversion to make a profitable trading system for yourself. And as you know, Joel always keeps on telling me, and there is always a famous saying as well: don't give a man a fish, right? Just teach him how to fish, and they will be, remember you forever. And that's what we also believe, and CMT also kind of accredit that you need to learn, you have to build your trading journey, you have to build the money. That's your money. You have to protect it with your hard-earned strategies. So one of the indicators that I use to figure out the tops and the bottoms, because how many of you are interested in figuring out tops and bottoms? If anybody can put it on the chat, I'm just curious to know how many of you are very interested in figuring out where will be the market make a top or where will be market make a bottom. Let's see if anybody is interested or not.
That is a very dangerous question to ask, I must say, because who does not want to
Yeah, I know.
imagine that they bought the market at the bottom of 2008 and sold it at the top of 2020?
But you would be surprised when you go to social media, there are tons and tons of people predicting that I have predicted that the top and the bottom. Let's see what our serious traders think about it. How many of you are able to figure out the tops and the bottoms, or they want to trade the tops and the bottoms? Are we getting any answers?
We're getting some very fascinating comments. Rajendra says, of course, everyone is interested. Let me see if I can pull up some comments here as well. A lot of people are saying you can't, in fact, predict. So Natraj says you can't actually predict tops and bottoms. Ravi,
Sure.
very interesting point. This question is meaningless. I'd love to see what you have to say about that.
Awesome, awesome. I think so. You guys are really serious traders, because what is the hook of you to get in the market that you can predict the top and the bottom? And that's a myth. Okay. And, yeah, it's a meaningless question that, there is a famous saying: only two people can catch the tops and the bottoms with precision. One is God, and we are sure we are neither not God. And secondly, liar, and he can always tell that I have caught the top and I have caught the bottom all the time, and that's a lie. And if anybody says to you, yes, we have done that successfully day in day out with every date and time, run away from that person. But having said that, having a knowledge of a certain indicators, puts a probability in your favor. And friends, look at me, like, I'm using my words very carefully. Probability in your favor. I have never talked about certainty, because as a trader, okay, you are always playing probability. There is no certainty in the market. So it's all probability game that you are playing with, and that's what we are going to focus on in this presentation also. How do you stake probability in your favor? So if you go to a casino, we say house never loses. Why? House never lose because they are stacking the probability in their favor. And you, as an entertainment goer or playing for the speculation, usually ends up losing money because you are on the other hand, because the probability is stacked against you, not in your favor. So I'm going to use those concepts. Now, a lot of you people have heard about this term called as MACD, and funnily, a lot of people call them as McDonald's, MACD, movie average convergence divergence. Let's see if anybody actually know what how does this MACD line gets calculated, because I have met tons and tons and tons of traders throughout my journey from 2002 to 2022, more than 100, more than thousands I would call it. But I see this MACD chart plotted into their screen, and I ask a very genuine question to them. Sir, you are using this indicator, do you really know how it is getting calculated? I'm not asking for a formula, but the underlying principle. And to my surprise, about 98% of the time, I would say, no, we don't know. We just understand whenever this blue line crosses this orange line, sell. Whenever this blue line crossing the orange line goes up, it's a buy. And I'm talking about serious traders. Okay, when I talked about serious traders, and they also don't know how it is calculated. So let's see. KK, what do you guys think? What is this MACD? What does it do? How does it get calculated? Anyone who take a guess?
So I'm getting a few interesting answers. One says MACD is a delayed indicator. This
Fair
is
enough. Okay.
Savitri. Uh, let's see what else folks have to say about the MACD. Then there are folks discussing obviously what their favorite indicators are, etc.
Perfect. But see, as we just made a generalistic statement and what are our favorite indicators. But still, the people who are using MSCD, very few people know how it is calculated. I really want you to pay an attention to this indicator, because I would not brag about it. But yes, there have been times, and we can see it in the chart as well. The 2008 and 2022 chart had a lot of similarity in terms of what I'm going to talk about. Okay, so as I can see over here, lot of traders use this moving average crossover systems. What do I mean by moving average crossover system? 5-day moving average crossing 20-day moving average, or a 20-day moving 5-day crossing 20-day from top to down and going down. So that's what a lot of people uses. Now, if you see over here, I plotted a 12 period moving average and a 26 period moving average. Now, question should come to your mind. Vishal, why 12 and 26? Why not 520? Why not 1040? Answer is the person, and in fact, me and Joel had the fortunate to meet Gerald Appel, who is the founder of an MSCD in New York Symposium. Joel, if you remember, right?
Yeah, 2019 that was right. Gerard
Yes.
Appel is
So we met
unfortunately
him.
no longer with us, but his work lives on in all of us.
Yes, Joel. So that's where he kind of figured out, played around with a combination of 12, 26, and figured out this is the best combination that they kind of figured out. And a lot of software started using them. Now, just for the concept, obviously, you can play around with the moving average combinations and everything. But what I'm trying to show you is whenever the market moves up much faster, whenever there is a short term momentum going up, and if I'm taking a short term moving average, in this case, will be a 12 period moving average, and there is a long term period moving average, in this case, is a 26 period moving average. So, question to our audience and a Joel to you would be, if the market picks up in a very short span of time, which moving average would you think will move much faster? Is it a 12 period or a 26 period? If the market moves up in a short burst, okay, like this, there was a big up move, which indicator will take the first lead and the second will follow? Is it the short term or the long term?
I'm waiting to see some comments from the audience. And you have a flurry of answers that say 12 or the lower period.
Very nice. I think so everybody knows the answer, right? The answer is why? Because this 12 period moving average is only taking the last 12 bars of data, whereas the 26 period day moving average is taking a longer duration. It is taking 26 bars. If I'm looking on a daily chart, it will be a 26 days. If I'm looking at a 5 minute chart, it will be 26 into 5 minute number of hours that we are going to trade it. Now, this is the beauty about it. The momentum picks up. You can see the difference between the short term and long term moving average is almost zero. And that's what MACD is plotting here, zero. But as the momentum picks up, the short term picks up very fast, whereas the long term 26 period moving average takes a little bit of time to catch up. Now, in this zone, the difference between the short term and the long term moving average kept on increasing. And that is what is depicted by this MACD. It's actually a momentum indicator. It is built on moving average, and somebody I remember said that MACD is a lagging indicator. It's a classical definition of a book that MACD is a lagging indicator, but you will see that MACD is also a very powerful indicator for you to judge the momentum in the market. And I'm going to go in with some historical live trades examples that we have talked about. Okay, so it is nothing, but this is the blue line is nothing but a short term the difference between the short term moving average and a long term moving average. So a question would come to your mind, that's I understood what is a blue line. It's nothing but a difference. When I say A minus B, is this blue line? Then what is this orange line? Orange line is nothing but an average of a main MACD. That means because MACD may also have little bit of whipsaw, to iron out those whipsaws, we have drawn a moving average of the main MACD. So when you go back to your charting application and Trade Tiger and you open up, fire up your Trade Tiger, and what you see is okay, whenever there is a breakout or like whenever there is a big up movement, this moving average will the MACD will move much faster, whereas this MACD average will take its own sweet little time to catch up. And whenever there is a crossover, you can trade out of it. So now this is how the MACD signals gets generated. There are three ways MACD generates bullish and bearish signals from three main sources: bullish centerline crossover, bullish moving average crossover, and positive and negative divergence. I'm going to focus in this positive and negative divergence where I see a maximum amount of value derived for me as a serious trader in MACD. I'm going to talk about bullish centerline crossover and bullish moving average, and there are I know few very good traders who use them, but I will leave up to them to come and discuss at one future point of time. So center line crossover is nothing but not much of a difference between a two moving crossovers, because this is I've just plotted the MACD, not the average line. So we can see over here, whenever there is a zero line crossover, we get a buy signal, and whenever this line crosses below, it's a sell signal. Again, we got whenever it crosses from a zero line, it gives you a buy signal, and again, it gives you a sell signal. It looks very nice, but it's nothing and a no difference than a 12 and a 26 period moving average crossover system. As I told you, it has not much of an impact. If you ask me, it's just a moving average crossovers. Then there is another way. Okay, so this is what we got: sell and a buy. And I'll show you a very interesting point, Joel. What happens is a lot of traders want to make money, but they don't want to be disciplined enough to do anything. What do I mean by that? Is as a trader, you would come, say, assuming you have learned certain new art of trading through an MACD. You get a buy signal, you buy, and immediately you get a sell signal, you sell. You go short, and then immediately you get a buy signal. Then again you get a sell signal, so you cover your position at a small loss. You go short, it gives you a buy signal. Then you say, okay, yaar, Vishal ne to kuch alag hi sikhaya tha. It is not working, but let me give you one more try. You went long, and it gives you a sell signal with a small loss. You go short, and then you again get a buy signal. We got about 6 trades. And in that 6 days, you would not have lost more than 100 or 150 points. But I told you one habit that we have inculcated, that we don't want to be wrong, is the most dangerous habit to have it in the market. You will be wrong most of the time or many of the time, but the key for being a successful serious trader is when you are wrong, your losses has to be small. And when you're right, say assuming you got a buy signal at whatever 600, it just went up to 800, and then got a small sell signal which didn't materialize, but again got a buy signal, and then from 800 it went up to 1100. The point is, most of the trader lose patience and discipline in this bad sideways market, and they go out of the market. And whenever the big move comes, they say, you know what, मैंने तो यहाँ पे देखा था, I would have bought it, but they never buy it. It's always on the book. And that's why a lot of people have agitation against technical analysis, that it works in the hindsight. It's not technical analysis that did not work. It's you as a trader did not follow the discipline. And that's what I learned on the psychology session when I was studying about CMT. You have to have a discipline to stay to a system for a while before it starts showing you profit. Another people, traders use them as MACD crossovers, where what I can see is whenever, if you remember the 1226, the red and the blue line, whenever the MACD crosses its trigger line, you buy, and whenever it crosses down, you sell. Again, whenever the MACD crosses its trigger line, you buy, whenever it crosses, sell. And that's so on and so forth. You can see over here, even in 2020 crash, the MACD gave a buy signal till a point of, in Tata Motors, to a nice rally of 100 rupees. The point is, the technical analysis work, but most of the time, and I can vouch for it, the people who are watching this YouTube right now live and who will watch it in the future, everybody will agree with it, that whenever there was a crossover, and forget about them, including me, even I have difficult time following my discipline. Okay, the serious traders always make money when they stay disciplined to the market. Whenever the signal comes, they stay in the market for a while, and whenever the signal gets out, they tend to exit. They don't trade on greed and fear. And the most important thing for a trader, they don't trade on hope, because that's the biggest enemy for any trader, the hope. Okay, now the real crux started coming in, Joel. So, Joel, which is the hill station nearest you? Or I'm sure, think about the viewers who are viewing right now. Which is the nearest hill station that you live by? Give me an example, Joel.
From Mumbai, I think Malabar
Yep.
Hill is a close hill station.
Oh my God, that's a hill station. And in other words, let's take an example of Lonavala, right? With an Western Express Highway,
Right.
I'm assuming it's still not an hill station. But let's take that you are going in an hill station. When you are sitting in a car, Joel, with your friends and family, and car is going at a 60, 70 kilometers per hour on the inclination, right? Now, just for fun, Joel, you remove your accelerator, foot from your accelerator. What will happen?
Oh, my vehicle will begin to slow
Joel,
down.
yeah, Joel, I can't hear you. Your voice was breaking. Sorry.
Oh, sorry about that. So I was saying my vehicle may begin to slow down.
Perfect. So that's exactly will happen, but it will not immediately go down, right? Because
That
of
is
your initial thrust.
continue.
So that's
Yeah.
what happens, guys. Like whenever you're trading in a strong momentum market, so in when you're trading or when you're in the car, there are two things: direction and the acceleration. Right? Your direction is up, and the acceleration is the speed with which you are going up. Same thing happens in the trading as well. There is a direction which is price, and then acceleration is something called momentum. And I'll show you what do I mean by that. That whenever the car is going up and you remove your foot from the accelerator, what will happen? Your car will continue to go up because you had initial acceleration. But after a point of time, that acceleration will stop. Newton's second or third law of motion, every action has opposite reaction, or the thing will continue to go in a direction unless and until there is an opposite force acting on it, right? The acceleration will stop at one point of time and your car will start coming down. The same thing happens in the market. When there is a momentum, when there is a momentum, the prices are always going up. The direction is up. But your acceleration, if it is slowing down, it gives you an early indication that this car may stop on the top of the hill and it will start coming down. And that in a trading world or a trading arsenal we call it as a divergence. What do I mean by divergence? Is prices and the momentum. Your car speed and acceleration has to go in the same direction, up. But if your direction is up but acceleration is going down, the prices are going up but the momentum is coming down, then there is a divergence between the two. And in this case, when the prices are going up and the indicator is going down, it is called negative or bearish divergence. And similarly, on the other hand, if the prices are going down, you would expect the momentum to also go down. But in this scenario, the momentum is actually going up. That tells you the speed with which the index or the stock was falling is not falling that much. So there is a higher probability that the market will reverse. And guys, listen to me. I'm using my words very carefully because whatever you say will go into your mind, will go into your computer and on your keyboard. What do I mean by that? Because when I said there is a higher probability that it can go down, it's a higher probability that it can go down. In this scenario, what will happen is the in this scenario, what will happen is मेरा माइंड में प्रोबेबिलिटी ही था आई वॉज ऑलवेज थिंकिंग प्रोबेबिलिटी सो इवन इफ आई एम रॉन्ग आई विल बुक माई लॉस एंड मूव आउट नाउ दिस इज अ क्लासिकल एग्जांपल दैट आई वांटेड टू शो यू what if the prices are going up 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 your car is going up, right? So if you see over here, let's take this for a second. Sorry, let's take this for a second. Whenever the market was going up, this was the swing top, this was the swing top. Market made a new top, the MACD also made a new top. Market made a new top, MACD also made a new top. Everything was fine. The car was going at a nice speed. But then something changed. Market made a new high. But what did the momentum do? The acceleration. Joel, for fun, removed the accelerator. That does not mean the market will start coming down immediately. Okay, what happens is market made a new top, the MACD make even lower top. Now this was telling you that there is a very high probability. Again, I'm using words very carefully. Probability, there is no certainty. Okay, there is very high probability that market will come down. And if I was a trader, what will I do is I will draw a trend line, which everybody I'm sure is aware of. Whenever you see a divergence, you figure out where did this momentum started from here, and where did this momentum started from here, and you draw a trend line which connects this bottom. See, unless and until there is an action on the price, unless and until your car stops and starts coming down, there is no guarantee. Car can continue to go up for some more time. So you really want some confirmation that the car has stopped and now the car is started to come down, and that's where you will draw a trend line. And whenever the trend gets violated, you go short on the market and you will find this momentum picking up near the top. The bearish divergence, go to your 2008 chart, go to your 2022 chart, go to your 2002 chart, and go and plot MACD along with the price performance, and you will see this negative divergence glaringly showing you on your face. It's just that we were not ready to listen to what the market was telling. Okay, as you can see over here, which was this was 2020 crash I was just talking about. What was market doing?
Vishal, a couple
Market
of
was
questions while you are going through this, just to keep in mind. One of them is how can this happen? Won't the price drive the moving average upwards as well? So I think maybe you can just touch a little on the difference between price and its momentum. That's one. And the other was, in such an opportunity, where do we get long and short signals? So I'll just leave those questions with you, and you can weave them
So
into the narrative.
that's a brilliant questions, and I want to answer them right away. So let's first finish this, and then I'll answer those both the questions. So look at this example of Bajaj Finserv. Market making new tops every time, stock making new top. What is the acceleration doing? Is actually coming down. Similarly, there was a negative divergence. And this you can see over here, price is going down. But what is happening with the MACD? I would have expected the MACD to also make a new bottom. But the MACD is not making a new bottom, it's actually making a new higher bottom, okay, on the upside, and that tells you that the momentum on the downside is coming down. So let me take this opportunity to answer the first question. It was a brilliant question. Okay, if the prices are going up, the moving averages should go up, so should be the MACD. Then why does the MACD does not make a new high? Now imagine you are going to a eighth floor, okay, or you are running say 100-meter relay race or 100-meter like let's say 42 kilometers marathon, okay, and you start very briskly, you started running very fast, very fast, very fast. You covered the first 24 kilometers or 30 kilometers running very fast. Eventually you will slow down because your body will start taking a toll on you. And at one point of time, I'm hopeful that you will cross the borderline, but a lot of people get tired and start walking. And after that, if the walk is even too much, then they just quit and they move out, right? Same thing happens when you're trading. When there is a big momentum happening, okay, when there is a big momentum happening, the prices, if you see over here, the momentum, the way momentum moving is much faster. This is your first 20-30 kilometers. Then what happens is the momentum, the speed with which we were going up started going down. And that also creates a problem or the doubt in the trader's mind. Just imagine yourself also. When you bought a particular stock and it made money instantly, you are very happy. You will buy even more, or maybe you will buy something else because theoretically you are very happy and stock is making money. Apne buy kiya, within few minutes and few days or maybe few weeks you make a bumper profit. But what if you start buying and for few days it doesn't even go up, or even if it goes by hardly few points or percentage, or after few months it does not move, you will be very worried about your stock कि बॉस मैंने लिया था और stock बढ़ ही नहीं रहा है. And whenever it cracks down, that is where you will start panicking and you will start selling it. Like you, everybody will start selling it. Similarly, when the prices are going down, who is in control? The short sellers are in control because they are pushing the prices down. Even the short seller wants कि मैं बेचूं और automatically profit आना चालू हो जाए. But the problem is when they are selling and the profits are not coming very fast, they are also getting reluctant, they are also worried. So big spike up will make them to cover their short position, and that where you will see a big spike on the upside. So I hope I have answered the first question. Now I'll try to answer the second question. Okay, Vishal, where does we actually start get an entry or an exit signal? Now if you come over here, I will show you something very interesting. Whenever you start seeing divergences, you figure out the nearest tops and the nearest bottoms, okay? So if I see where did this first being bottom started from, this was the bottom from this swing started from. What was the last swing which did not made a new high but MACD did not made a new high? Was this one. Where did this swing started from here? So you can see you have got a 2 points. Unfortunately this does not have a pointer. Let me see if I can laser pointer. Yeah, if you see over here, this swing started its journey from here bottom, and this swing started its journey from this bottom. So if I can draw a trend line, and for drawing a trend line, how many points do you need? You need 2 points. So in that case, when you draw a trend line, assuming this was a trend line, and you are connected those trend lines, and whenever it gets violated, that's your opportunity to go short on the market. And I told you, you can never predict the top and the bottom, but I told you that with a higher probability you will be able to find near the top, near the bottom. I'm not saying you are going to short here. No, you cannot do that. But at least, if even if you are able to short the market somewhere around here with a stop loss of few basis points up or the swing high, depending on your risk management, you are able to capture a lot bigger move. Now let's see in this scenario as well. This was an exceptional scenario of 2020, but if you see over here, the market was making multiple bottoms. Where did the last swing started from? This top. Where did this first swing started from? This top. So if I draw a trend line connecting this bottom, sorry, this tops, I get a violation of a downward trend line somewhere around here. And that was my journey and a confirmation that the market may go up. So with this, I hope I have answered those questions. So I can take this forward. Joel, any more thing?
No, we're good. There is no. I think we're good in terms of content.
Sure. So let's talk about mean reversion trading system. Okay, so anybody wants to take a? I've just talked about how you can trade divergences, and guys, and I'm very serious. I'm not making up things, but this is one of the most powerful arsenal that you really want to keep it in your trading kitty when you are doing a swing trading or you are investing, and you really want to know where or near the market we are going to make a top or a bottom. Keep a track of the momentum and the price on the bearish and the bullish divergence, and I'm pretty sure it will help you a lot. So with this, I'm going to move to another way that I trade is called mean reversion. Now a lot of people have this concept of what is mean reversion. So this is my philosophy. Markets are trend following in the long term, but a mean reverting in the short term. So let's take an example of Rohit Sharma. I'm sure he's a brilliant, maybe this was a little bit old. I would have put Virat Kohli over here. But yes, he's a king. Kohli is back, and I'm so happy about it, right? So let's take this example
Sam,
as a cricketer.
before you
He
run
was
ahead, I love this example. So before you run ahead, a couple of very interesting questions that have come up. Um, One is, can we rely on divergences on RSI as well? I know today RSI is not the focus of the conversation, but that's one question. Second is, what is a good time frame to use the MACD?
perfect. So I would answer both of them. So we have talked about RSI in the latest slides, where you can take divergences, but just imagine two things. RSI divergence, and that's my experience. RSI divergence are much faster in nature, and they tend to give a lot of whipsaw. But when I have used MACD divergence, they're like Titanic, because somebody did mention that they are lagging indicator. But being a lagging indicator also has its advantage. It's like mammoth Titanic trying to move its side, right? Titanic cannot just turn the wheel on and just move to the right to the iceberg. It's huge, right? So for the market or the stock to actually reverse its entire uptrend, you really don't want to rely on a very short term momentum indicator. You really want to rely on something which is like giving you ample of opportunity to move, and that's what MACD gives. So that's why I use a lot of divergences on MACD. But having said that, there are divergences on RSI. So that's how I look at it. And Joel, I forgot what was the second question.
Do you have any recommendations of time frames for MACD, or is it something one must learn to optimize
Okay.
themselves?
So ideally, I always use the default period because I felt that they work beautifully, and I use MACD mainly on the daily time frame to figure out the divergences. So for me, that has worked, but I always encourage you to play around, because a serious trader is not just going to take someone's statement and blindly going to put it out. He's going to validate by its own self, and I'm sure you're going to do the same. Do the daily, do the weekly, and then take it from there onwards. Yeah,
Sounds
awesome.
good.
So let me just talk about the mean reversion philosophy. So we have, Rohit Sharma who is doing brilliantly well. His ODI average is 47 runs. He comes and he gets out on zero, and we are not very happy about it. But in the next match, he comes and scores 50. What did he classically do? He is actually reverted to its mean. So why mean reversion is very important for us? Mean reversion is very important for us because it's a natural tendency of trading. Why I say natural tendency of trading? Because it lasts for few hours to few weeks. हम लोग को सबको short term trading करना है. Nobody is interested in the long term investment. Okay, that's the fact of it. Everybody is attuned to buy low and sell high, और सेल हाई एंड बाय लो. सो इट इज़ वेरी नेचुरल फॉर अस. जब भी हम लोग कहीं पे भी कुछ खरीदने जाते हैं तो वी ऑलवेज बार्गेन, एंड इफ यू गेट एन अपॉर्चुनिटी वी ऑलवेज से कि ओके आई वांट टू सेल समथिंग, आई वांट टू सेल एट अ हाई प्राइस एंड गो टू बाय इट बैक एट अ लोअर प्राइस. And that's the natural tendency. And this is the reason why a lot of traders use mean divergent trading system. It's high win to loss ratio. Because we constantly want to win. The dopamine in our brain gives us a kick when we are winning, and it also kind of destroys us when we are losing. So that's why a lot of people revert back to the mean in terms of trading, mean reversion trading strategy, because it gives you very very fast, quick and quick out profits. Your equity coup will be very smooth. Your drawdowns, the losses that you're going to make will be in complete control. Low capital deployment. So these are all the major reason that a retail trader loves to trade mean reversion trading system. Low capital deployment, low drawdown, smooth equity curve, high win loss ratio, buy low, sell high, and last for few days to few hours. Who doesn't want that? It's like a dream come true for us, right? So let's understand. But finding a very profitable system is finding your house in this mess of, is in this what you call is this empire of building. Okay, you really can't figure out a very profitable trading systems. So we have tried to do one of them. So these are the major swing bottoms. So as a mean reversion trader, what do you want to do? You want to buy low and sell high. You want to buy here, sell here. You want to buy here, you want to sell here. You want to buy here, you want to sell here. Is anybody differing from here? Everybody wants to buy near the bottom and sell near the top. Buy near the bottom, buy near the top. And I remember that, the comment that it is a meaningless to, and he wants to figure out what is my answer. And I told you, right, you cannot predict what will be the bottom and what will be the top. Sorry. But there are indicators, there are certain actions that do tell you that we are near probably a bottom or a top. And one of the indicators that I use is like moves very fast, but I will try to see. We all know what is something called as an overbought and oversold. So whenever this indicator goes above 90, we call it overbought. That means the market is too up, and whenever it goes below 20 or below 10, we call it as an oversold. The market has gone down too fast, and there is a higher probability that it will reverse. Now you really want to compare your swing bottoms with this indicator. Now if you see over here, let me just go back and show you this. The indicator entered into an oversold zone. The market was near the bottom and made a rally. The indicator went into an oversold zone, made a bottom, and made a rally. The indicator went into an oversold zone and made a nice rally. Again oversold. You can see near the bottom, made a rally. Bottom rally, bottom rally. About 10 to 8 times the indicator was able to pick near the bottom and pick near the top by telling you this is the oversold market and this is an overbought market. 100 marks for the person who can answer me what is this indicator. A salute, I would say. Marks तो नहीं दे सकता मैं. Any suggestions we have got?
No, nothing yet, Vishal.
Yep. So nobody is able to kind of decide what is this indicator which is helping you to capture
Now
the
suddenly
process.
I've gotten easily a dozen responses. ROC or momentum, ADX, relative strength, MFI, CCI, stochastics, RSI, ADX. All of these. There are
And the
numerous
answer
others.
is RSI. And the answer is RSI, whoever I answer. But there is a twist to this RSI that I'm going to talk about. The RSI is not the conventional 14 period RSI. The RSI that I've used is 2 period RSI. And I would highly, highly, highly encourage you to go back to your chart, open up, fire up your trade tiger, put out all the charts. And what you do is put a 2 period RSI, not a 14 period RSI, and change your overbought and oversold signals from 70/30 to 90 and 10. And you will start seeing magic happening in front of your eyes. So the person who got the RSI as an answer is the right. So RSI is nothing but a momentum indicator developed by Wells Wilder. I will not go into the detail or the equation, but I just wanted to keep an conversation and your thought process in line. Okay, last in last 14 days, Joel, 7 days I was happy and 7 days I was sad. How was my last 14 days?
A very average 14 days, one might argue. Huh?
Very average, right? Yep. But if in last 14 days, 10 days I was very happy and 4 days I was sad. How was my last 14 days now?
I'm log on your happiness then, Vishal.
More happy. See the smile on my face, and the vice versa. If the 10 days are you're sad, or 11 days you are sad, but 3 days you are happy, you're still on an average sad. Now remove this happy sad part of it and put it into the day's momentum. So what is RS is nothing. Calculates the average momentum whenever the market closes up. There's a positive days, and whenever the prices closes down, it's a negative momentum day, and that's where your RS calculations comes into the picture. And somebody asked, can I use RSI? So a lot of people use RSI in terms of the relative strength, bullish and bearish divergence. Yes, you can use them. So if you can see over here, the prices in this scenario, the markets were going up, but the RSI was going down. You could have used the trend line, or you can also use trend lines on RSI. There are traders I know who uses trend line on RSI because they are more smoother than the choppiness of the market. So whenever there is a breakdown on the RSI line, they go short. Similarly, whenever the market was making a lower bottom, but the RSI was making a new high, whenever there was a breakout, it goes up and there was an upside momentum. So you do, and what we call as a trading the divergence. And guys, I highly, again, I don't want to re-emphasize this many times, but I really wanted to tell you this, guys. These bullish and bearish divergence are very powerful tools. Okay.
Vishal, before you
Now,
jump on to the next point, this is a very interesting question. I'm slightly sidetracking here, but Surya has this interesting one. Should we use this on stock options or index options? And this kind of leads to a slightly deeper question on what instruments must one use quote unquote technical analysis tools on? I'm very fascinated to
so you,
hear what you have to say about that.
so I think so. You're actually opening up a Pandora's box, and usually when I give my answers, I get in a lot of trouble because everyone has entitled to their views, and so am I also entitled to my views. And I still believe that you can actually use technical indicators on the option stock option charts and even on the index option charts, and we actually practically use it. And I'll tell you my rationale for it. Okay, say assuming I'm an option seller, so I'm going to make money. I'm going to make money on theta decay. And if I wanted to capture a theta decay, how will that happen? Because the prices has to go down at the end of the day, right? Assuming Nifty is remaining sideways between 3 to on a Thursday weekly expiry. The index is remaining at that point of 3 o'clock. Do you think the ATM option will also remain at 100 rupees or 50 rupees? The answer is no, because the expiry is very near. There is only half an hour. The ATM is trading at 50 rupees, and if nothing happens, if the index remain at the same point of time, the ATM will become zero. So what is happening to that momentum? If you plotted a trend following indicator like a super trend or an RSI or something of that sort, which captures the trending behavior of an option, you would have been able to capture that the option is going through a theta decay right now. And even if the index is not going through, you can actually capture that theta decay or the dying side on the option side. So I am a firm believer that options, you can use indicators, and some of the strategies that we trade, we use indicators on the option charts to get us a good judgment.
Vishal, I must apologize for kind of derailing the conversation with that question. But this is just something for just a quick time check as well for everyone. We are into pushing up to about an hour with this session. And see, the concern, not the concern really, is that there is so much to talk about in the space of technical analysis. It's not possible to obviously cover everything. So we're working with a very, for the time being, a succinct agenda. If there is interest in sessions like these, then I'm very happy to look at how we can think more, think about doing more sessions like this. But for the time being, just in the interest of everyone's time, I want to bring our focus back to the session. But Vishal, thank you for taking that one. It's very interesting to think about where technical analysis applies and where it doesn't. Because my general rule of thumb is if there are a lot of people trading something, that is where you want to use technical analysis. But anyways, moving back.
Perfect. So this is the traditional use of that we have been taught also, that whenever the RSI is above overbought, you go short on the market, and whenever it is oversold, you go long on the market. Some works sometimes, but does not work most of the time, because you are trading against the momentum, right? So, and this is I'm talking about specifically for our 14 period RSI 70 and 30. So a lot of people makes this mistake of thinking of this actual term, that market is overbought, don't buy it. Market is oversold, let's go and buy it. Now, if you see, if you would have bought HDFC Bank when it went into an oversold zone of 30, the stock just kept on going down, 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 and the oversold became more oversold and became more oversold and became more oversold. So maybe you want to think your thought process, or remove, kind of change your thought process and wear a hat. Okay, it's like a train coming to me from a full speed from this side. I cannot put my hand and say, boss, now you stop. No, you cannot. The minute you do it, you will be in a problem. So what you do is you let the train run its own course, and when it starts to turn back, so that means, sorry, when it is started to go up or exiting the oversold zone, when it is exiting the oversold zone, you actually go long. So this is one of the ways that you can use it. And then there is unconventional way of using RSI, which we have recently, they're talking about, and I know I forgot the name of the author. He has propounded this 60-40 rule, in terms of where he talks about that the momentum really picks up. It's actually the contrarian of what we have been studying, that you actually go long when the market is crossing 60, and you remain wrong till it goes below 40, and you will be able to capture a large amount of trend. So that's where you really want to also put a thought process, that जो सब सिखाया है वो right होना जरूरी नहीं है. You really wanted to challenge sometimes the conventional wisdom, and that's what the role of a serious traders are. They just don't take it what it is given to them. They actually play around it with the thought process and make a habit out of it. Now I'm going to talk about one. I'm going to contradict myself a little bit here. See, up till now I said never go and buy in the oversold zone, and actually you do the opposite. In fact, it just before the overbought zone you actually go long, but that was for a 14 period RSI. But when I reduce my RSI period to 2 period, okay, you can see over 2 period RSI. Now what you can see is I'm actually going to use it to time the market near the top and the bottom. And what does that mean is whenever the RSI is going below 10, I'm actually trying to do a little bit of bottom fishing, but with risk management in place. But what I can see is, you can see over here the prices is making a bottom and trying to go up. Price is making a bottom and trying to go up. Prices is getting at a bottom and going up. Every time the prices reach a bottom and starts to move up, goes down and moves up. So that's the beauty about of using an unconventional way of an RSI. So I'm just plotting the times wherever the RSI went below 10, and you can see what happened to the market, almost near to the bottoms, almost. And that's why I was telling you can, with probability, try to pick the tops and the bottoms. And the person who said it is a meaningless, and I do appreciate that, but I would highly encourage you to put this indicator on your arsenal and see how does it work, and give me a feedback. This is another example of Reliance Industry. I just plotted out whenever this RSI was below 10, you can see Reliance making almost the swing bottoms. So then you can start building a lot of strategies around it. Okay, maybe I can do a covered call writing, or maybe I can do a ratio spread, or maybe I can do something long short futures. So opportunity just opens up for you. So this is I'm going to talk about one of the strategy that I use, mean reversion, bear trading. I was at the New York Stock Exchange famous bull, and I think so this click was clicked by my good friend Joel Panicoat only. So Joel, remember this was the photo that we clicked at the New York bull. So a lot of
I remember
people,
this photo as well.
yes, and we were holding the bull by the horn. Everybody went and started holding the bull by the horn, and I said, "No, I'm a bear. Let me not go in front of the bull. Just go behind the bull and grab the walls." So this is how, on a lighter note, you really wanted to be against the trend, but you have to be very tactful. And people make fun of it, like, people say that you cannot, the general audience is wrong at the top and the bottom, the retails is wrong at the top and the bottom. The answer is yes, they are wrong at the tops and the bottoms, but the retail is right during the majority of the trend, because who is moving the prices? Retail, FI, everybody is moving the prices. That's why the trend happens. So you want to be with the trend, you wanted to be with retail, but with certain conditions. When you realize that there is a euphoria, you don't want to be with the retail and you become a serious trader. Okay, so we developed a trading system and we have worked with this trading system. So I'm just giving you a thought process to build on it. We always want to short something which is going up. So I am looking for a stock which is going up about 200-day moving average. What I'm looking for is whenever 2 period RSI is greater than 50, that means the stock is an overbought or the index is overbought. Then today, from today is Friday, I'm assuming, right? Today is a Friday. So I would go to check on Thursday, what is the stock up? If the stock was up by 3%, more than 3%, it comes into my radar. 3% up, RSI greater than 50 and close greater than 200 SMA gives me a good indication that this stock is highly overbought. Okay. And then what do? I do is actually take that stock and not short them in the next day on a Friday morning, but assuming that stock closed at 100, say assuming on Thursday the stock closed at 96, no, Thursday open, or maybe Wednesday close, it was 95, and then on 95 on Thursday closing it was 99, so it was more than 3%. The next day at 100 rupees, I'm going to put a short only order at 325, and I'm going to put a stop loss and everything. So this is a classical example. Stock about 200-day moving average, more than 3%. What do? I go up and short 1% above, and next day. And how many times has it happened to you? Let's see with an experienced traders as well, and we're going to put out and be very honest. Whenever there is a big breakout and you buy that breakout, the prices comes down. Has it happened to you guys? Let's see. Are we getting any responses? Or everybody actually catches the breakouts always right?
That would be a miraculous person to meet, Vishal. Someone who catches every breakout, right? But meanwhile, while we're waiting for answers, there is another interesting question which interesting because there are layers to this, and I again don't want to derail the session. But what time frames? What time frames are you talking about? This or any other strategy on?
So right now, this is on a daily time frame. That's a very good question. So I'm going to evaluate the performance of the strategy on a day-to-day basis, not on intraday. So that's where we have figured out that it's better to use a little higher time frame, which gives you a lot of perspective about trading. Yeah. So this is what happened to the stock of LIC Housing Finance on intraday basis. You can see the prices going up, and then there was the 1% up, and then during the day it just kept on going down, down, down. This was an intraday to show you what happened in this red candle. The stock went up, we shorted on the top, and the prices just kept on going down. So we actually pocketed about 3% on that particular day. Another example we took was the stock was about 200-day moving average. Yesterday it was about 1% up. We shorted it. What happened? The prices went up. We shorted it during the entire day. The red candle that you can see, the entire day the stock started coming down. And that's where we captured a good amount of 4% downfall on that. So we can also set up the stop loss and profit targets. Study shows stop loss hurts in the mean reversion trading strategy. So there are different ways of developing stop loss, and if I would highly encourage, if you are not attending the CMT conference which is happening on this coming Saturday on 5th of November, please do try to make kind of reach there, because there are a lot of traders who are going to talk about how do they risk manage, what are the ways that they manage the risk, because it's all about risk management. It's all about risk management, guys. The people who are able to survive in the market were able to do their risk management right. And if you are watching this video right now or in the future, and I'm pretty sure you will agree with me that the people who have survived through the journey of the market is people who have managed their risk. Never get lured by the big M2M screenshots of traders, because we don't know what is their risk. We are just looking at one figure and just trying to make those figures and lose everything in that period. So define your stop loss. We can have risk based stop loss, volatility based stop loss, technical stop loss. We figured out a very interesting way of putting a stop loss called as maximum adverse excursion. That is, and this is what I learned from CMT, by the way, guys. And usually people will talk about percentage stop loss. आपने बेचा है तो 3% ऊपर बेच दो, या 3% stop loss लगा दो, या 5% stop loss लगा दो. But this was the most interesting way that I learned when I was studying about my CMT called as MAE based stop loss. What does it do? So I took all the trades that I've conducted and figured out what are my profitable trades. And then what I figured out, the profitable trades were never immediately profitable. They actually go against me for some time. मतलब मैंने 100 पे कुछ बेचा है तो immediately वो 99, 98, 97 नहीं होता है. But 100 वाला 101 गया, 102 गया, and at the end of the day or during the course of the day it came down and closed at 97 or 96. I made a profit. I sold at 100 rupees. I bought it back at 96 rupees. Usually in your Excel sheet, it will show as 4 rupees profit. But what is not shown is from 100 rupees, when you shorted it, it went up to 103 also. Basically, when you short and it goes against you, it is an adverse condition to you. You're losing money because you shorted at 100, it went to 103, you lost 3 rupees. So what I did was, I took all the trades who were profitable trades and figure out, on an average, all my profitable trades give me this much of percentage, but how much they go against me before they become profitable. And that gives you the general characteristic of your trading strategy. And guys, these things nobody teaches you, and that's where CMT conferences like what we do on 5th of November will be helpful to open up your vision to kind of say, okay, boss, these are also ways of putting stop losses. So we figured out around 3% was a very nice stop loss where you put a stop loss and a 6% target based on the MFE. And that's how we developed this strategy, and which is making money for us, by the way. So that's on the mean reversion side. And now we are going to talk about the last part is trend following. And I always say, trend is your friend. Everybody has heard of this. Trend is your friend, but nobody has heard until it bends. So when you're doing a trend following, the best part is you need to know when to enter the trend, and you also need to know when to exit the trend, and that's the most important thing. And this is my one of my favorite ways of entering the trade, which is the purest form of trend following. Do you guys know purest form of trend following? The purest form of trend following is buying a stock at an all-time high. It may sound come a shocker to a lot of you, because how can you buy a stock at an all-time high? Remember, guys, if we are betting on a horse, I'm not going to compare trading and horse betting or anything of that sort, but I'm just trying to open up your thought process. Where would you bet your money on? The horse which is running the fastest. When a stock is hitting its own all-time high, and you can compare it with other stocks as well in terms of relative strength, you know you yourself got a winner. And that is where whenever the stock makes an all-time high, along with the high RS rating, you have a very good trader. Similarly, this was the trade that we took it and way back. So I just wanted to highlight this. This stock was Loris Lab. Stock did not do anything, but once it reached its an all-time high after 1 or 2 years, the stock just kept on going up and up and up. Similarly, that does not mean that you just buy and set and forget. What CMT helps you to think about risk management first than anything else. Whenever there is a breakout, and we as a trader have a lot of us have a very favorite indicator called as super trend. And what I did was, for a fun of it, did a Google keyword search, and I figured out super trend was used in India the maximum amount of time sometime back. I don't know about the current scenario, but a lot of people use super trend as a trailing stop loss.
We
So
had a
this was my
question today as well, Vishal, about super trend and when and how to use it. So this is an interesting segue for you.
awesome. Thank you. Thanks, Joel. So whenever super trend is nothing but a volatility based indicator. What do I mean by that? That a stock, say assuming a lot of people tells you that you have to keep a stop loss of 5%, 6%, 7%. That is little bit incorrect, I would call it, because if the stock is moving with a higher volatility, your stop loss is going to get stopped out. You are going by a stationary number 1, 2, 3%, but the stock itself moves much faster, right? Or maybe it is moving by 5, 6%. And if you're going to put a stop loss at 1%, you're going to get stopped out. So what super trend does helps you to do is figures out what is the recent volatility in the stock and multiplies that volatility by at least 2 times. What do I mean by that? If the stock is moving by 3%, so it will tell you ideally you should keep your stop losses 6% away from your entry point. And immediately when I say this, you have to keep your stop loss 2 times your ATR or 2 times your volatility. अरे विशाल इतना लंबा stop loss कौन देता है? Why would you keep such a long stop loss? See, idea is that stop loss should not get hit. The problem with us traders are we want to keep our stop losses small, want to trade large quantity, and when we make a loss, that loss gets into our head. But what if the stop loss is large enough which does not get impacted? Reduce your position size. And as Joel told in the beginning, we are going to have a risk management, we are going to have position sizing session later on, and we are going to talk about that. But here you can see whenever there was a breakout and I super trend was positive, I just went long with super trend as my stop losses. So as and when the market kept on going in my favor, mind you, it touched here but never closed it. I'm waiting for a close, and this is where it closed. So from 120 to about 280 odd levels, Taurus Lab never gave us sell signal, and we just rode the entire rally. And that's the power of a super trend or trailing stop loss. There is another mystery stock that I took. FLA India way back I traded, and that's why I'm showing you all these examples. Breakout of an all-time high or an IPO-based breakout. Again gave you an opportunity to enter. Again gave you an opportunity to enter. And people say that you should never buy an all-time high breakout, and I start laughing at them. Because what I figured out, the maximum amount of money that I've made is buying on the stocks which are trading an all-time high. And you can see over here again it broke out all-time high. A good leader stock will keep on making all-time high again and again and again and again and again and again and again. But a dead stock, like people will go and buy DHFL, people will go and buy Satyam, people will go and buy Silverline Technologies, which is making an all-time low. And that's what I don't do it. That's not what serious trader or that's not what professional trader does. And what I've done is FLA India लिया, जब भी breakout हुआ, all time high breakout हुआ, I bought long into it with a super trend as my trailing stop loss. Breakout, super trend as my trailing stop loss. Sometimes you will not make money also, but eventually if you trade this strategy enough, there is money to be made in this strategy. So this is how I would encourage you to go on your charts. Take any chart, take out their all-time high, put the super trend, and see the magic happening in front of eyes. And this is the last thing that I'm going to talk about. How do you combine? कि विशाल मेरे को ट्रेंड फॉलोइंग भी करना है और मीन रिवर्जन भी करना है. So this is, we have built a system for you. So the stock should have made 52-week highs in the last 1 month. That means there is a momentum. 14 period RSI should be greater than 40. That means the stock is not very oversold or there is no tendency of the market to go down. Remember our favorite indicator 2 period RSI? It goes below 20, then you go lock half the quantity. And if the market goes down just 1% from your initial purchase price, then we buy the remaining half quantity. And we'll see with some examples. And then we will have an exit rule when 2 period RSI is greater than 80 or at least 2% up from our purchase price. Or you can want to put a stop loss which is an ATR based stop loss, super trend based stop loss, or a 10% which is far off stop loss which does not get triggered. And we will only take 2 fresh position per day. This will give us a diversification. Now this is a classical example that I'm going to teach you. The stock made a 52-week high recently. Then after making a 52-week high, everybody went into the stock, or maybe there was a failure of a breakout. What happens? The 14 period RSI was not below 40, just touched near 40, but it did not close below 40. The 2 period RSI was below 20. You buy half of your quantity. Immediately, after a few days, it gave you an opportunity to book it out. What happens again? Sonata Software again made a 2 period RSI below 20. You went long. Again, the 2 period RSI went above 80. You exited your position. Let's take another example. The stock hit a 52-week high. Again, there was a failure of a breakout. What happened to the prices? Came down. What happened to the RSI? Below 20. You enter when everybody is selling. Immediately the stock went, the 2 period RSI went above 80 and it gave you a sell signal. After a breakout, a support becoming a resistance, you can see the RSI went below 20 and there was a close on the upside. Again, a drop below 20 and a close above 80. And this is how you can combine the various trading strategies as well. And this gives you an edge in the market. So with this, I want to, kind of put out to you that I'm really thankful for Shane Khan for, putting this on, radar and just make sure that it happens. And Joel, you want to talk about the conference because it's going to be a state-of-the-art conference that we're going to have it.
Yeah, so the 2022 APAC Summit of the CMT Association is essentially a culmination, if you might, of the growth of the recognition of technical analysis in the Indian financial services industry. Just by way of background, the CMT Association is the world's foremost credentialing and advocacy body for technical analysis. Credentialing means we run the CMT program, where we basically set the curriculum and the exams, and folks prepare for the exams either by themselves or with prep providers, and they take the exams. There are 3 levels of these exams, And in addition to the three levels, you need to meet a couple of other criteria in order to earn the CMT charter. In addition to that, the CMT Association also conducts various large format and small events as well. So we conduct a lot of events for our members in the form of chapter meetings, virtual online sessions. There are publications. We have a podcast that's available to everyone as well. It's called the Fill the Gap podcast. So there's a lot that the CMT Association is doing, primarily in the space of what we call advocacy. The idea with advocacy is this, that technical analysis needs to become a key part of the investment management decision making system of anyone who is transacting with the markets, whether you are facing the markets or you are facing customers and talking about the markets. You need to understand technical analysis in order to manage your risk response. And with that in mind, the summit is an opportunity to bring together the top minds from around the world. In fact, half the global board of the CMT Association, each of these are professionals with a minimum, on average, of 20 years of experience, talking about what they have learned over the years and what they are currently doing now. Um, and this is happening as a hybrid event, both in person as well as virtual. You've seen the link we shared a few times. Feel free to check it out. And that's something that you can engage with the CMT Association for. Why people engage with the CMT Association? For broad reasons. One, knowledge. Because, like Vishal mentioned, we met the inventor of the MACD, Gerard Appel, in 2019. Just this year, we were both in Washington, D.C., spending time with John Bollinger, the inventor of. But my point is,
Bowling your bad.
these people, the folks who get together and kind of create the cutting edge of technical analysis, that is the kind of community CMT Association comes from. There is a lot of learning to be had, there's a lot of knowledge to be had, and there is value in networking with these giants as well. And so that's something to think about. And in addition to that, what we're also trying to do is to create content that will be of value to everyone. Because we understand the CMT program is not necessarily for everybody. And we do, having said that, we do get a lot of retail traders who go through the CMT program, not necessarily because they want to be professionals in the financial services industry, but because they want to test themselves against a global standardized body of knowledge. So that's something to think about. But again, not necessary. The purpose of organizing this session, and I want to thank the platinum sponsors of the 2022 APAC Summit. Remember, it's an APAC Summit, and so we have an audience from all around the region coming. The reason we wanted to do this session was to just open the doors to what ways are possible to make money. This session was not meant to give answers, it was not meant to give solutions, it was meant to open doors, right? So I hope we've at least been able to introduce you to what are the ways in which one can come up with investment management ideas. Now, the next session, again, this will be free. This will be a continuation of our base camp. So it's kind of, we've met at the base camp, we went up to the summit, and then on the way back, we'll stop at the base camp again and have a second session that focuses purely on risk management and trading psychology. Now, I remember I started as a professional trader in 2004. And between 2004 and the subprime crisis, I always like to joke that I learned a lot about the markets. I used to trade bond futures, money market futures, but I learned a lot more about myself. And that actually took my career in a whole other trajectory where I spent more time exploring behavioral psychology. Now, in the past, let's say about 20 years was when it began, but especially in the past 5 years, behavioral psychology, and from by extension behavioral economics, and by extension financial markets and trading psychology, has really become common conversation, to the extent, and this we'll talk about this in the session the 8th of November. We have a lot of companies that actually are built around just teaching professional experienced fund managers how to protect themselves and their funds against their own behavioral biases. So the key to understand, and Vishal touched upon this in many parts of his session, is it is not just about learning the rules. It is about learning the rules and learning how you operate in context of the rules. A lot of questions went by, which, for want of time, we could not really address. Is what are the specific settings that Vishal uses for his strategies? It is far more important, I feel, to understand what optimizations of any strategy will work for you, and not just because of what markets you like to operate in, but what kind of a person you are. Um, a CMT charter holder who currently works in a treasury of a bank is very clear that he does not like high volatility markets and does not like low volatility markets either. He trades in the middle. And was it Mark Minervini, Vishal, correct me if I'm wrong, who said that there's a time to go long and there's a time to go short, and then there's a time to go fish.
Yep,
Sometimes
that's Mark
knowing that
Minervini.
and knowing what is the time for you to fish is probably the more important thing. So, like I said, if you can make it for the summit, nothing like it. If you cannot, of course, understandable. But we would love for you to join us both here, and yeah, please do join us on our Discord server as well. So we're trying to build out this space where the CMT community can get together, talk markets, talk technical analysis, but it's also open to anyone who is fascinated by technical analysis and wants to kind of get involved with that. The short link for that is cmta.fyi/discord. Discord is becoming very popular as a community management platform, and we are looking very seriously at how can we grow the community here and create learning opportunities, both for, like I said, members who are already part of the CMT community and those who want to just learn and engage with these market professionals and veterans and the like. So that's really in a very large nutshell, what I wanted to say about both the summit, the CMT Association, and the work that we're doing here. I hope you found it worthwhile. And Vishal, thank you. I know you're traveling today and still you were able to make some time for this. Thank you for taking out time. Thank you for doing this session. You and I go back a long time, so I don't want to do the artificial vote of thanks here. But I do appreciate for everyone the time that you've taken out. Sorry, a couple of comments that just came in. The Discord link. It is cmta.fyi/discord, discord, right? So once again, thank you so much to everyone who's joined. The recording for this session will be available as soon as the session ends. So it'll turn from a live session into a recording, and I really hope that we're able to continue this engagement. I mean, I must again thank our partners who've really forced us to look in new directions to how can we help to fulfill our own mission, which is advancing the discussion around technical analysis in a more meaningful, thoughtful, mature way. So, on that note, Vishal, thank you very much once again, and I will see
Thank
you
you.
very soon.
Thank you.
Thanks so much, guys. Bye bye.